We are the CAT8, also known as the Community Assistance Team 8.
Is a group of Jain individuals and professionals
who are assisting the community at large
during the COVID-19 crisis.
CAT8 began just before the COVID-19 crisis,
when it held a can challenge,
where children created iconic monuments
using cans of food,
raised some 3 tons of canned foods,
enough supply for 4 months,
for the Watford Food Bank,
run by the Trussell Trust.
During the COVID-19 crisis,
CAT8 is helping the elderly, the vulnerable,
those in isolation and key workers.
With meals, essential shopping,
help with medicine collection,
and someone to talk to
whilst coping with isolation.
CAT8 has lined up
a series of webinars.
In addition, we have created a helpline
for individuals and businesses
that need guidance
on the various government schemes.
And the topics of the webinars.
CAT8 is working with
or supporting various organizations,
including Govt,
Rebate,
Navnath,
SCVP,
One Jain,
the Trussell Trust,
and working with many volunteers.
CAT8 is the newest network fiber,
connecting the community. Thank you. So just to let you know, CAT8 are very kindly supported by a number of businesses to enable us to carry out our work. Back to the next slide, please. So our speakers today are Sumi Shah and Hanish Shah. Sumi Shah is the Finance, IT, Human Resources, and Training Partner at Flemings. After graduating from Warwick University, Sumi qualified with BDO Binder Hemlin as a chartered accountant. And after gaining a few years of experience in commerce, she joined Flemings as a partner in 1999, when the firm was on the springboard of an extensive expansion. Hanish is a manager in the Accounting and Assurance Department at Flemings. Having joined Flemings as a qualified ACCA member in 2000, Hanish has built a wealth of expertise in a variety of business sectors. The training, supervision, guidance that he provides to his team has meant that Fleming's clients receive a highly personalized and value-added service, which goes beyond simply filing VAT returns and statutory accounts. So over to you, Sumi. Thank you.
Thank you, Ramit, for a fabulous introduction, and a very good evening to our audience today. I hope you're all keeping safe and well and enjoying the glorious weather that we've been blessed with this week. If I can just share my screen first. Okay, the COVID-19 crisis has brought many, many challenges, both in the field of field of medicine, socially, economically, and it has affected the world, needless to say. The UK government has stepped in and pulled all the stops possible and done whatever it takes to ensure that the businesses and the individuals in the UK are safe and are looked after. And this is with a view that when and if the lockdown ceases, we will hit the run grounding. Businesses will hit the ground running and be able to start back as they were and kickstart the economy. The government has introduced many schemes to help employees, employers and businesses. So this evening we will recap on what the current schemes are and share with you some of our experiences. And we hope that you do have lots of questions to ask us during the Q&A session. As accountants need to earn some knowledge, if not money, at this point in time. So I'm going to kick off with the Coronavirus Job Retention Scheme, just to recap. The objective of the scheme was to help businesses retain staff during the lockdown. Many businesses had to just shut down and there was absolutely no way of them earning any kind of cash flow or any kind of revenue. So the option for many of these businesses was either to let their staff go or to keep them on and continue paying their salaries. And of course, that would have caused them to go into liquidation or administration, and they would not have continued. So the government has stepped in to help businesses furlough their staff. Furlough means they retain the staff, they pay them normal salaries, but they're not able to work. This has been available to all employers, including charities, recruitment agencies, public authorities, any employer that has had staff on their payroll as at the 19th of March 2020. The scheme has proved to be very, very popular, and I don't think it was anticipated that it would be so popular. The Chancellor reported that more than 1 million businesses have furloughed more than 7.5 million workers. Now, that is a huge number. And it was expected to end in June, but I guess the way the virus is going and the results of it, the scheme will operate now until the end of October 2020. From August 2020, there'll be a new format of how it will operate. And the government has promised some guidance. Hopefully this week we'll know a little bit more. So how does this work? The government pays a grant, which is the lower of 80% of the employer's regular wage, up to £2,500. On top of that, the government pays the employer's NI contributions and the auto-enrollment contribution that the employer makes in relation to the 80% or the £2,500 that an employer would pay his employee. The regular payments include regular wages, non-discretionary overtime, non-discretionary fees, and compulsory commission payments. So that on the HMRC website, there is a very specific criteria of what regular wages mean. If employers have decided to furlough their staff, they have to be furloughed for a minimum of 3 weeks. And this furlough period can be backdated to the 1st of March. So this furlough scheme was introduced after the lockdown happened, but a lot of the businesses have been able to backdate their furlough periods to the 1st of March. And one of the beauties about furloughing staff is after you've finished your 3-week furlough period, after your employee has completed their 3-week furlough period, they can actually come back to work for a few days if you have the work, and then be furloughed again for a minimum of 3 weeks. The furlough period can last longer than 3 weeks as well. It is up to you as the employer to decide whether you just pay the 80% up to £2,500 or the full normal wage for your furloughed employees. And this is of course subject to agreement by the employee and their contract of employment. In terms of eligibility, who is eligible? Full-time, part-time, agency workers, anybody who has been on your payroll as at the 19th of March 2020 would be eligible for this furlough scheme. In addition to that, employees who have been shielding, who have been told to shield, Employees with caring responsibilities resulting from COVID-19, they are also eligible to be furloughed. Apprentices, if you employ apprentices, they too can be furloughed and they can continue training. Now, with apprentices, some of them tend to be quite young, and you have to be careful when you apply the 80% rule that you're not underpaying them, and you have to meet the minimum wage requirements in relation to their age. Finally, office holders, so for example, company directors, they too are eligible to be furloughed. Now, for company directors, they're allowed to continue to perform their statutory duties, but they cannot do any work that generates revenue for the business. For your other employees, if they are furloughed, they should not be doing any work whatsoever. One thing to remember, when you furlough your employees, they are still your employees and they retain the same employment rights as your non-furloughed employees. So unfair dismissal, discrimination, redundancy payments, SSP, everything that applies to a normal employee applies to a furloughed employee. Now, I'll explain the importance of this to you in a little while, but just remember that furloughed employees have the same rights. Holidays, so just as in the previous slide, employees also have the right to have their holidays accrued in the normal way. So just because they're furloughed, it doesn't mean that they stop getting any holiday. Employees can take holidays whilst on furlough as well. Now, it beggars belief, if you as the employer are paying an employee 80% of their wage and they're not working, then they are sort of on holiday. But if they decide to take the holiday, then you as the employer have to pay them at the normal rate of pay. In terms of carrying over any holiday balances, the working time regulations have been amended to allow the carryover of up to 4 weeks of statutory leave. And I believe this is to do with the additional days that would normally be allowed to be carried over in relation to bank holidays. So because a lot of the bank holidays are happening during this lockdown, I think the working time regulations have been amended just to allow people to take over 4 weeks of the statutory leave. Sickness and furloughed employees. So employees who are currently off sick can be furloughed and they should stop receiving SSP. There is a very fine line on the guidance here because some notes that you read say that that staff can be furloughed and when they're off sick, and there are other guidances which say that they technically shouldn't. If they are on SSP and they're on statutory sick leave, then they should continue to be on that. So again, if you are considering this, then you should seek advice from a professional. Employees, same thing applies here. Employees on long-term sick leave or who are shielding can also be furloughed. Question on furloughed employees who become sick when they are on furlough. What happens? Do you pay them SSP or do you leave them on furlough? At the moment, it is up to you, the employer, what you decide to do. But you've also got to ask, what is the likelihood of a furloughed employee telling you that they're ill while they are on furlough? I think it's pretty low, the chance of you being told that. So, but it's up to you to decide. And if you decide to bring them back into work, to unfurlough them, and they claim that they are ill, then you also have to decide there whether you lengthen their furlough period or whether you start paying them SSP as you would a normal employee. The process of claiming the grant is now pretty much straightforward. In terms of processing the payroll and submitting your payroll data, that is very straightforward. You would do that as you would normally. The only difference would be that if you've decided to pay your employees at the rate of 80% of the regular wage, that is what would appear on their salary slips. You would separately need to calculate the amount that you are eligible to claim. And the HMRC website has very good guidance, step-by-step guidance on how to do that. The HMRC portal to claim the grant has been open since April, and you can, once you've done your calculations, you can go into the portal with details of your company and the UTR or the PAYE reference, log into there and make your claim. You would also need details of your your business's bank account so that the monies can be paid directly into your account. The experience is that the grant is being paid within 6 working days of the claim being made. In terms of what records you should keep, now this is very important because if ever the HMRC decide to do an audit on your claim, you need to have this in place. So you need to keep your records for a minimum period of 5 years until 30th of June 2025. And one of the things that you must have on record is the agreement between you, the employer, and the employee. Now, some sites say that you don't necessarily have to have the agreement from the employee when you furlough them, but just as a common procedure, where anything that happens between an employer and an employee, always have it in agreement, in signed agreement, so that if ever there's a dispute later on, you have that to fall back on. ACAS website has some very good templates on furlough letters that you can issue, that you can download and issue to your staff. It has a skeleton format which has all the details that you should have in that letter, and you can then adapt it in whichever way you want to, so that it's suitable for your business. Many people have asked, what if I don't have the cash flow to pay my staff? But as I mentioned earlier, the scheme allows claims to be made 14 days in advance of your salary payments date. So if your salary payment date is the 30th of June, you could actually make the claim by about the 15th of June. And as I said, the payments come in within 6 days of making that claim. You obviously have to make a declaration when you're applying for this grant that the money that you receive will be paid and is for your employees. One of the things when you're calculating the claim, you would of course need to know who you furloughed and how long you have furloughed them for. If their furlough period is likely to end after you've made your claim, then one of the issues that has come across is that there's no way you can go in and correct your claim for any particular month. So you may have to make an adjustment in subsequent months. What if a lot of the companies that we're aware of, when the COVID crisis struck, decided that they wouldn't be able to continue, and they made a lot of their staff redundant. So when this scheme was introduced, the Chancellor said, look, we want your business to continue, and we'd like your employees to come back if they are willing to, and you can furlough them. So this is now allowed. If you've made your staff redundant on or after the 28th of February 2020, you can actually bring them back in on your payroll and then furlough them. Finally, important note something very important to note, when it comes to anything to do with employers and employees, it is very, very important, particularly if you want them to be coming back to you when this lockdown ends. You have to maintain good communication channels with them. You have to make sure, even if they're on furlough, that you're aware of how they are, how they're faring, and really make sure that they are worth something to your business, because in a time like this, there is a very strong possibility that if you don't show this compassion, you may end up losing staff. In terms of being aware that they retain their employment rights and everything, you also have to be sure that when you make a decision about who you want to furlough, you have explained clearly to the staff that you're furloughing the reasons why you're furloughing them, and that there is no element of any sort in terms of discrimination. Okay, moving on to the next scheme that's available for employees, the Coronavirus Statutory Sick Pay Rebate Scheme. Normally, and before the 13th of March 2020, if your employee was ill, you could only claim, sorry, not claim, but pay SSP to your sick member of staff from working day 4. This scheme allows you to pay your employees from the first qualifying day of sickness for a period of up to 2 weeks. And you as an employer are eligible to reclaim all of that SSP that you paid to your employee. So from the 13th of March, if your employee had coronavirus or the symptoms, or were self-isolating because someone they lived with had symptoms, you can claim up to 2 weeks of SSP for those employees. And then from the 16th of April 2020, if your employee was shielding because of coronavirus, again, you could claim. Now, for shielding employees, you can claim for every single day that they are shielding. So if they're off for 12 weeks, you can actually claim, you can actually pay SSP to them and claim SSP for the 12 weeks. Remember, when you're making the claim, that the rate before the 6th of April was £94.25, and after the 6th of April, it is now £95.85. How to claim? The online service just opened yesterday, and you would need to check the HMRC website to see how the process works. I had a brief look today, and it looks quite straightforward, so you shouldn't have any issues. Again, in terms of retaining records, you must retain these records for a minimum period of 3 years. The employees cannot provide a fit note for their illness because they're not supposed to go to the GP. But there is something that they can download from the NHS 111 website, which is the isolation note. Now, we had a few staff who were not aware of this fact that they needed to download the isolation note, and they tried to do that after they'd overcome their illness, and unfortunately they were not able to download it. So what we said to them is just write us a letter with details of your illness and when you were ill, and we will just use that as notification to us. But other than that, you just be careful, don't throw away all your records in relation to coronavirus claims. You should retain them for at least 3 years, especially for SSP. Okay, I hope this is a good enough recap of the different schemes available for employees. I'm now going to hand you over to Hanish, who will talk to you about the schemes that have been available for the self-employed and small and medium-sized businesses.
Thank you very much, Sumi, and thank you, Rumit, for the introduction. What I will do, Sumi has talked about employees. My part of the presentation will really be to do with the other side, where you are either self-employed and the business in general, how they have been helped by the government on various schemes, and also looking at the funding side of what's available for businesses. So, as far as the self-employed are concerned, Sumi, if you can.
I can't seem to move my slides. Nirmal, I'm trying to share my screen.
Yeah. You were already sharing the screen.
Yeah. Sumi, don't share your screen. That's fine. Yeah.
Okay. Right, we'll start off with the self-employed persons. This came about quite late after the follow scheme came out. It was quite.
Anish, sorry.
Anish,
sorry, could you just come a bit closer to the mic? Thank you.
Okay. This scheme for the self-employed came quite late after the follow. A lot of lobbying from the self-employed. And Rishi Sunak came up with this scheme. So what the scheme does, it allows you to claim a grant of 80% of your trading profits, but to a maximum of £2,500 a month. And it's only available March to May 20, so it's for 3 months only. So it's a temporary scheme, but the way things are, it might be extended. At the moment, it's unlikely it's going to be extended, but we'll just wait for whether it will be or not. And while you are receiving that grant, you can still continue to work or start a new trade or take on other employment. So it doesn't stop you from doing other work in view of getting extra money. To be eligible for this, there are quite a few criteria. First of all, you have to meet. I'll go through the steps of this eligibility. So it's open to self-employed individuals with a trading profit of less than 50,000. So you look at your 18-19 tax year and see whether your profits were below 50,000. If you are, then you should be eligible. This is self-employment income, which should be profits below 50,000 or 50,000. If you don't meet that criteria, then what you do is look at your 6 returns and your 18-19 tax returns to see if your average trading profit was less than 50,000. If you meet that criteria, then you should be eligible for this grant. However, and this may apply to many people who have other sources of income also, your self-employment income should be equal to 50% of your other income. So say you have rental income of 60,000 and self-employment income of 50,000, then you won't qualify because your self-employment income is less than your total income. It's less than 50% of your total income. So that's one criteria you have to just be careful that you meet. The other item is that your tax return for 18-19 must have been submitted by 23rd April 2020. The normal date would have been 31st January 20, but the government extended that date. So if you haven't filed your 18-19 tax return and you're self-employed, you won't be eligible for this scheme. And you must have traded in the tax year 1920. And you are still trading, except if you have an issue to do with coronavirus, say you can't trade, then that is an exception and the HMRC will accept that. You should also have the intention to continue to trade in the tax year 2021. Now, the other factor which you have to self-certify when you're claiming for this grant is that your business has been adversely affected by the coronavirus. So that is self-certifying, because the government won't know about that particular criteria. All they will have are the figures of your profits, but they won't know whether you have been adversely affected or you have continued to trade in 2021 or intend to trade in 2021. So these are self-certifying factors which you have to take when you tick off when you're applying for the grant. So you could adversely be affected, your business could adversely be affected, say, because you're self-isolating, or you are sick yourself because of the pandemic, or your staff don't turn up, or your supply chain, your supplies don't come in. So all these are adverse matters which would make you eligible for this scheme. However, if your trading started in the tax year 1920, then you're not eligible for this scheme. So you must have been trading or self-employed before 5th April 2019. If you're not sure whether you're eligible for this scheme, it's a very easy way. The HMRC have set a portal where you can check your eligibility, whether you get this grant or not. All you need is your UTR number and your national insurance number. If you go into this link, which is on the slide, and type in your UTR number and national insurance, it will track back to your tax records with the HMRC and see whether you're eligible for this scheme or not. And it will give you an answer straight away. However, if you still think you're eligible, but the portal is telling you you're not eligible, you can continue with the portal and you can ask the HMRC to actually review your records in case there is an error on the system. So there is a way to go back. It's not an appeal, but you're telling the HMRC to review. So that's one way of doing it if you're not happy with what the result from this portal is. So what happens if you're eligible for this scheme? The first thing, the HMRC would have looked at your records already and seen whether you're eligible for this scheme or not. If you're eligible for this scheme, they would have either texted you, emailed you, or written a letter to you. Nowadays, the HMRC are using the SMS and the email system to speed up matters. However, be very careful when you get those emails. If you see a link directing you to an HMRC website, then more than likely it could be a scam. So the SMS and emails you get shouldn't have a link. So just watch out for that. Now, the HMRC want to contact everyone by mid-May 2020 if you're eligible for this scheme or not. By now, most of you should have been contacted. If you haven't, then you need to go into the HMRC website, the link which I showed you in the previous slide, and go through that to apply for the scheme. Once you're on the portal, it will give you, the portal is really good. It will give you instructions of then how to apply. So one of the things we found out, and where many clients do not know what to do, is as your agents, we cannot apply for this for you for this scheme. You have to do it yourself. So how do you do it yourself? So you have to create a government ID. So when you go through government gateway ID for yourself, once you obtain that government ID, then it is very simple, and you go through the system, and it will be very easy to apply from there onwards. All you'll need is your UTR number and NI number. But as agents, we cannot claim this for you. However, we can tell the HMRC to review your claim in case we think it is incorrect. And that's where the agents can come in, but they can't make the claim for yourself, on your behalf. Now, these grants was supposed to be paid in June, beginning of June 2020. However, many of our clients and people I have spoken to, they have already started to receive this grant, this money. So the maximum would have been 7,500, but depending on your average, 80% of your average profits. So although the government kind of said it was going to pay up beginning of June, people have already started to get the loans, and they're paying it within 6 days of. Has been quite useful for many of the clients. We have come across many people who have been self-employed, but their situations have been quite different. So some, for example, have a loss in between the year. So they say the first year they had a profit and a loss and a profit. So there are ways of how to then calculate whether you're eligible for this scheme or not. Again, we have got instances where in say 16, 17, you are self-employed. In 17, 18, you didn't trade and you are not self-employed, but in 18, 19, you recommence your trading. So again, the HMRC will look at this scenario for the last example I just gave you. They will only consider 18, 19 because you skipped a year. So there are quite a few examples the HMRC have given on their website, which is quite useful for you to look at if you do want to check whether your calculation from the HMRC in terms of what grant you're receiving is correct or not. Now this grant, as I mentioned, is a taxable grant. So once you receive the grant, you have to put it in your next tax return, and tax and NIC will be payable on that, on the grant you actually receive. Now, many of the clients are not aware of this portal, the HMRC, that you can apply for this scheme. So it's quite important you go into the website and see for yourself whether you're eligible or not, and talk to your professional advisors if you have difficulties, because they cannot claim on your behalf, but they will be able to assist you on how to claim. There's a very good step-by-step guidance from the HMRC for that, and there are YouTube videos you can also watch, which actually tells you how the scheme itself works. One of the criteria of claiming this is your business should have been adversely affected by the coronavirus pandemic. Now, in the future, the HMRC might have a look at whether you claim the grant correctly. So it's best to do with the downfall of your business. That could be the reduction of turnover, or you had to close the shop or your business for a certain period of time because there were no staff available, or you were self-isolating. So keep these records with you when you make this claim. You may need it in future. So that was self-employed people in terms of claiming the grant, which is the self-employment scheme. I'll now come to other measures the government has taken to help individuals. And this is not only for the self-employed, but for any taxpayer. So if you have a payment which is due by 31st July 2020, you may now defer it until January 2021. You don't have to apply for this deferral. It is automatic. So if you don't pay your July 20 installment, then automatically the HMRC will assume you will pay it or you have deferred it. Now that will help your cash flow in the short term. But when you come to January 2021, what impact will it have? There'll be a huge amount to pay at that point in time. It's the July payment which you defer, balancing payment for the tax year 1920, and also your advance payment for the following year, 2021. So you just have to budget your cash flow and have a look what your liability is going to be. And what I would recommend in this is get your accounts done quickly, as quick as possible, so you can then establish what your cash flow is going to look like until January 2021 if you want to defer your payments. Now, for VAT registered businesses, there's a VAT deferral scheme. VAT registered businesses which are due from the 20th of March to 30th of June 2020 can be deferred. And that deferral can be until the 31st March 2021. What does that really mean? That means you're getting 1 quarter's worth of VAT to defer until 31st March 2021. However, if you are paying by direct debit and you want to defer these payments, you have to ensure to cancel your direct debit. We have come across a situation where people haven't canceled their direct debit, so the HMRC have actually collected the monies for the VAT payment. So please ensure you cancel your direct debit in good time for it not to be collected. One item, whether you defer your payment for your VAT, you still have to file your VAT returns by the normal due dates. There's no way of kind of delaying this. You can defer the payment but not filing your VAT returns. That is essential you follow that particular rule. One other item the government has come up is time to pay. What is time to pay? Time to pay is if you have difficulties in paying any of your taxes, you can talk to the HMRC and they might agree for you to have a payment plan. It could be an installment payment, or it could be anything. Say there's a debt collection proceeding you're undergoing, they would suspend that temporarily. So the number you need to call is on the web, on the slide, and they're open only up till certain times, so up till 4 o'clock from this number. So you need to call them during that period. The lines are quite busy, so you might have to keep on trying on. Now, don't leave it too late. Don't leave it until the payment is due. You need to make your consideration now and talk to the HMRC before the date the payment is due. Which we have come across when people have gone to the HMRC to agree a time to pay is they will ask you what sort of taxes you haven't paid. It could be corporation tax, it could be income tax, it could be VAT, it could be PAYE. Now the HMRC, the way we have seen it happen, they will give you an installment payment for your corporation tax and income tax. However, for the VAT and PAYE, they will be reluctant because what they will tell you, you should, because you are trading, you should now be able to pay it up. So to get away with the corporation tax and income tax in terms of installment payment, but the VAT and PAYE will be more difficult. It's not that you won't be able to do it, but it will just be more difficult. So it is best to get your professional advisor to actually deal with HMRC from that point of view. So next slide. One more slide. And now I'll give you a practical example of where you have an owner-managed business. And normally when you have owner-managed businesses, they will devise their remuneration strategy in a certain way. One of the scenarios we have come across, and we tend to kind of look at it from time to time, is where you give yourself a small salary up to the NI threshold. So there's no tax or NI to pay at that point in time when you pay yourself. And then you top it up with a dividend, and a dividend up to your basic rate band. Now under the CGIRS scheme, which Sumi talked about in terms of following employees and how to claim, it is very clear from the HMRC that dividends do not count as a remuneration. And so, and therefore your follow claim will only be based on the salary you pay yourself. So anything which has gone through your payroll under the PAYE system is what you can use to calculate your claim. Again, as Sumi said, you know, you have to meet the criteria of 80% and a maximum of 2,500. So in this particular instance, say you pay yourself, that's what most people tend to do for tax planning purposes. Your claim as far as the CGRS is concerned will be £575 a month, which is basically your 719 pounds a month salary times 80%. So that's what you get. So dividends are not counted within this calculation. And again, if you follow yourself as a director, then you cannot work or do any work for the county which is revenue generating. It's a very gray area. What do you call revenue generating? You can only do statutory duties. So is paying your supplier a statutory duty, is doing your VAT return a statutory duty. It's a very gray area, and I think the HMRC will be pragmatic with some of the things, because you can't leave the company on its own to do its filing without anyone. So I think there's certain things you can do if you're followed as a director. Other schemes which the government has kind of introduced, which has helped a number of businesses, in the main, the small businesses, are to do with the business rates. Now, any business in the retail, hospitality and leisure sector in England for the tax year 2021 will get 100% business rates relief. That means there will be no rates to pay. So if you received the rates for 2021, with an amount you had to pay, the local authority would have revised bill showing nil rates to pay. So this has helped quite a lot of businesses, because rates is one of the big expenses for any business. And it is being administered by the local authority, so it is automatic. You do not have to apply for it. Now, for this particular business rates holiday, your property should have been a shop or a restaurant or a cinema. Basically, it should have been in the retail, hospitality and leisure center. Now, I've come across many clients asking me, am I eligible for this particular business holiday grant? Now, for retail sectors, you should be wholly and mainly in retail. So if retail is not your main part of the business, then you will not be eligible for this business rates holiday. For example, I'll give you an example. Say you have a dentist. Is that a retail business, or is it more of a service business? Although they sell things like toothbrushes or other items. So in my opinion, it is not a retail business, because they are not wholly and mainly in retail business. More is to do with the service of healthcare. So in that scenario, you wouldn't be eligible for this business rates holiday. Next slide, please. One other item which the government has come up with, and which has helped many of the small businesses. So if you are a business receiving small business rates relief, that means your rateable value was below £12,000. So you would have automatically received small business rates relief, so you would have paid nil rates. If you are in that situation, then you eligible to get a £10,000 grant from the government. Now, this will automatically come, or should have come by now, from the government, the £10,000, if you are in receipt of the small business rate relief during the previous tax year. If you haven't received it, you need to contact your local authority. The local authority have been good in terms of giving the grant, although there have been delays in giving it. But if you haven't, you need to apply through your local authority website. It was not supposed to have been an application type of funding to get, or the grant to get, but people have kind of used their portal to apply for this grant and have got it. So where you don't, where you're not eligible, or where you didn't have the small business property relief, you still would be eligible for the retail, hospitality and leisure sector grant. So if your rateable value of your property was less than 50,000, then you would be eligible for a grant of £10,000 per property. So if your business had 2 or 3 properties and your rateable value was less than 15,000, and you are in the retail, hospitality and leisure sector, you'll get £10,000 per property. So many clients have been asking us, do I just get one 10,000 because I have 2 or 3 properties? No, you will get for each property, depending on the rateable value of that property. Now, if your rateable value of the property is between 15,000 and 51,000, then you get a £25,000 grant for that property. Again, you do not have to apply for this grant. It will be paid automatically. But again, local authorities have been late in paying this grant. So if you haven't yet received it, then you should go to your local authority portal, and most of the local authority portals have an application process, and you can apply from there, and you'll get a email back saying they're processing your grant, or whether you're eligible or not. Many businesses have cash flow difficulties, and where your turnover is not there, but you're still incurring your overheads or expenses going through, there will be a shortfall from a month-to-month basis. So for small businesses, what the government has done is, this is a new scheme. It's called the Business Bounce Back Loan Scheme, BBLS in short. And you as a business, not personally, you as a business, if you have a business, you can apply for this loan. And the maximum amount you can borrow under this scheme is £50,000. And it has to be, it can't be more than 25%. Limit is 25% of your turnover. However, the maximum available will be 50,000 under this scheme. And it is 100% backed by the government. That means if anything were to happen, the government would back you 100% of the loan. However, you have to be very careful with what that means. The lender of this 50,000 or the loan back scheme, first of all, will come back to you and ask you whether you can repay the loan or not. And they will look at all the assets you might have, and first of all, recoup that loan from that. Any balance left over will then be backed by the government. So the debt really is on you to repay, although it is guaranteed by the government. The good thing about this bounce back loan is there's no interest or repayments to be made for the first 12 months. So cash flow wise, there's no interest or repayments to make for the first 12 months. After that, the interest rate is fixed at 2.5%, which is a good interest rate in my opinion. because you don't have to give any security as such also on this particular loan. Now, the length of the loan is the terms of the loan is 6 years, but you can repay it early if you want to. Again, the beauty about this loan is there's no early repayment fees. Also, as far as this loan is concerned, there are no fees, administration fees or guarantee fees. Guarantee fees you need to pay to your lender. So again, that is paid by the government. Again, you don't have to give any personal guarantees, which is quite important for this particular loan. Now, if you have, I'll come to the next type of loan, which is the coronavirus business interruption loan. So if you already had that loan, you can refinance that loan to the bounce back loan, because the bounce back loan might be more suitable for you with the lower interest rate it has. However, it's the full coronavirus business interruption loan you have to refinance. You can't refinance half of it and half of it leave it as a bounce back loan. So the maximum is £50,000. You just need to be aware of that. Now, to get this loan, there's some legibility criteria which you need to meet. One is you have to be a UK business, and you must have been established by 1st March 2020. Your business must have been affected by the coronavirus, and is not currently using a government back scheme, another scheme like the one which I just discussed, the coronavirus business interruption loan. However, you can refinance that to a BBLS loan. One other criteria is your business must not be in difficulty. It shouldn't be in difficulty, means insolvent or in difficulty of paying suppliers as at 31st December 2019. So it has to be a solid business at that point in time. Again, it is not in bankruptcy or liquidation or undergoing any debt restructuring when you're applying for this particular loan. So if you meet this criteria, you can apply for the loan. Now, just to do with the bounce back loan, the best way to do it is to approach your current business lenders or bankers and apply through them. Although there are other accredited lenders, but if you go through other banks where they're not your bankers, then they will ask you other questions to do with your KYC, money laundering documentation to do with your business, because they still have to do certain checks. So it would be best and advisable to go to your current lenders rather than approach a new bank. But sometimes you might have to go to a new bank if your current bank is unable to process your application. So just bear that in mind. Now, the Coronavirus Business Interruption Loan Scheme, the CBILS, is another scheme, and this is different from the bounce back loan. For this particular loan, you have to actually do an application for it, which is quite lengthy. You have to go through the normal procedures of applying for a loan. They will ask you for profit forecast. They will ask you how you're going to pay the loan. They will ask you what have you done so far to mitigate your outgoings, various things, and based on will assess whether you're eligible for this scheme or not. So they have to do the credit check for this particular scheme. And that's why it has been quite unsuccessful. And one of the things I kind of looked at for one of our clients, and that client was refused this particular loan, was because the client had already had a commercial loan with this particular lender. And one of the criteria was that if your commercial lender can still lend you the money based on the current commercial loan, then you are not eligible for this coronavirus business interruption loan scheme, which was quite unusual, but that's the way it is. And that's why not many of the businesses have been successful in terms of this application. Now, this particular loan is 80% backed by the government, so it's partially backed, and that's why the lenders are a bit reluctant to lend on this because they have to do their own credit checks. Again, under this particular loan, the government will cover the interest for the first 12 months. Now, this is different from the bounce back loan because in the bounce back loan, there's interest and repayments you don't have to make in the first 12 months. However, in this particular CBIL loan, the only thing you don't have to make is the interest payments. You still have to make the capital repayments during the 12 months. So cash flow wise, the bounce back loan is much better, although the amount is limited to £50,000. Again, the rates which I have seen creeping up in this particular loan, they have been more than the 2.5% as the bounce back loan. So we have seen certain rates go up to 4.5%. There are a few banks which have seen about 2.5 to 3%. So depending on your profitability, cash flow, and projections of your profits post the COVID period, you need to think hard whether you want to actually take this loan or not. So that ends my session on businesses, self-employed, grants, rates. I'll hand you over to the panel, the moderators. Sumi, do you want to kind of add anything before?
No, I'm ready to